Is Adobe stock a buy after Q1 earnings? I'm going to answer that question in this video after I take a look at an overview of the earnings results. So you're going to want to stay tuned to get the answer at the end of the video. Here we go. So revenue increased by 9% for Adobe in Q4 up to 4.66 billion. Earnings per share of $2.71 was an increase from $2.66 in Q1 of the prior year. So showing increases in earnings and revenue, which is solid considering that much of the tech sector has been experiencing significant headwinds and showing signs of declining revenue growth and decreasing earnings per share. So this is solid that Adobe was able to increase earnings per share. Cash flow from operations decreased to 1.69 billion, down from 1.77 billion, so a small decrease year over year in cash flow from operations. And RPO, which is remaining performance obligations, at the end of the quarter reached 15.21 billion. What remaining performance obligations are essentially is customers that have signed up for and or paid for Adobe's services, but they haven't used it yet. Maybe they signed up to an annual subscription, but they've only used 1 month so far. So 1 month of use would count as revenue. The other 11 months would get accounted for as RPO. So that's what RPO is. Customers that have signed up, agreed to use the services, but they haven't used it just yet. It's a forward indicator of what Adobe's revenue will look like over the next 12 to 24 months because that's the customers will begin to use that as time passes and that will start to turn into revenue. Adobe also bought back 5 million shares of its own stock in the quarter. That tells me that management thinks its stock is undervalued. And I agree with management. Adobe is one of my top 20 stocks to buy for 2023. I made that video in January and I recommended Adobe stock as a buy for 2023. And I'll answer by the end of this video if I still think it's a top stock to buy. Moving on, Adobe said they're forecasting earnings per share of $11 in 2023. That was an upgrade after this quarter, and that would be an increase from $10.10 in 2022. So a 90-cent, or in other words, roughly 9% increase in earnings per share for the current fiscal year, which, considering all of the headwinds surrounding the macroeconomy and changing consumer consumption behavior, more spending on away from home experiences, less spending on things that they consume at home, I would say this would be a good year for Adobe if they manage to reach these forecasts. Now, looking at Adobe's valuation, it's trading at a forward price to earnings of 23.13, which is relatively cheap for a growth stock like Adobe. That's partly why I recommended it as one of my top stocks to buy in 2023. And after this quarter's earnings and the forecasts, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would reiterate that recommendation. So I still recommend Adobe stock as one of my top stocks to buy for 2023. So if you're interested in buying Adobe stock, I think it's a prudent investment right now, all things being considered. All right, so that's all I've got for this video. If you want to take a look at my full list of 20 stocks to buy, I'll link that to the end of this one. If you want to take another look at that video, I'll add that to the end of this one. I'll add some other ones as well, as you'll probably start to see right now popping up. So click on one of those and I'll see you over there. Thank you for watching.